Hello traders, welcome back to the channel. Today I am going to give you an ICT model that is very easy to trade. I will explain the model in a way that even a beginner can easily understand. Let's get straight into it. So, the concepts we are going to use in this model are simple. First, we will use fair value gaps and inverse fair value gaps. Second, we will use higher and lower time frame liquidity levels. Third, we will use market structure shift and change in state of delivery. And the last one is premium and discount zone. We will use only four time frames: 4-hour time frame, 1-hour time frame, 15-minute time frame, and the 5-minute time frame. So let's see an example, and then we will hop onto the charts to see how to use this model. Here you can see we had a sell-side liquidity sweep on a 4-hour fair value gap, and then we entered after an inverse fair value gap and a lower time frame market structure shift. After that, price moved straight to our target. You will get the full PDF of this model inside my Telegram and Discord servers. Make sure to join because I also share extra chart examples and daily market insights there. All the links are in the description. So let's get straight to the charts and look at some examples. So coming onto the charts, first thing we will do is open our 4-hour time frame. Then we will see what is currently happening. So here I can see that we are inside a 4-hour bullish fair value gap. We also have a 4-hour sell-side liquidity already swept, which means that the price could move higher. So we will mark out our buy-side liquidity. But first look at this. This 4-hour high isn't a clean swing high. So we will mark this swing high as our buy-side liquidity. Then we will drop down to the 1-hour time frame and mark our sell-side liquidity. But why? Because our 4-hour bias is bullish. So we have to only look for bullish scenarios on every single time frame. That's called the alignment of higher time frame draw on liquidity. So now, as soon as the 1-hour liquidity gets swept, we will drop down to the 15-minute time frame. On the 15-minute time frame, we have to only look for confirmations. Now you can see we have a 15-minute inverse fair value gap, which means that the bearish order flow has been changed. Now we will drop down to the 5-minute time frame to look for some extra confirmations. Here you can see we have a clear market structure shift to the upside. The price has also retraced back to our 15-minute inverse fair value gap. So we will enter long on this gap, place our stop below the low, and then for target, we will switch back to the 15-minute time frame and mark the swing high as our buy-side liquidity. We only have to target this buy-side liquidity level. So the market instantly triggered our order and then went straight to our target. A huge candle came which also swept our 4-hour buy-side liquidity. But never try to aim for the whole range. These types of scenarios are rare and never happen every day. If you forcefully try to do these things, it will always stop you out at break-even. Always target the recent liquidity levels and just do it consistently. Now look here. The entry we took is at a perfect discount level, which you can also see right here. It's at the 0.5 level. Always position yourself in discount levels for long opportunities. It will always help you stay drawdown free in small little retracements while holding the trade. Now in this example, on the 4-hour time frame, we will mark this swing low as our sell-side liquidity, which is already swept. Also, we are inside a 4-hour bullish fair value gap, which means there is more probability of price to move higher. Now we will mark our 4-hour buy-side liquidity. Now we will drop down to the 1-hour time frame and we will mark out this swing low as our sell-side liquidity because we have to look for bullish scenarios in order to align our higher time frame draw on liquidity. So as soon as our 1 hour sell side liquidity gets swept, we will drop down to the 15-minute time frame to look for confirmations. We don't have any strong confirmation till now. So now you can see we have a 15-minute market structure shift to the upside, and we also have a 15-minute bullish fair value gap. So we will enter long on this gap, place our stop at the recent low, and target the 15-minute recent buy-side liquidity. Like I have told you earlier, never try to aim for the whole range. So the market again triggers our order and slowly displaced to the upside, giving us a clean target. In this setup, what we are doing is we are aligning the multiple time frames, draw on liquidity, and then we are waiting for each time frame to align with the direction of the higher time frame, which results in higher probability setups. Then we are dropping down to the much lower time frame and targeting only the recent liquidity levels, which allows us to catch a higher risk to reward ratio and a higher win rate. So, thanks for watching. If you want to learn more and take your understanding of these concepts to the next level, make sure to join my Telegram and Discord servers. Inside, you'll get daily market overviews, educational content, chart breakdowns, trade ideas, and a community of traders who are all working to improve together. It's the best place to stay updated and continue learning every single day. And if you feel you need more personalized help, I also offer one-to-one mentorship where I guide you step by step, refine your strategy, and help you build a consistent trading approach. If you're interested in mentorship or have any questions, you can simply drop me a message anytime.